The last question is B11.8. On January 1st, 2018, Lewis SA, a small machine tool manufacturer, acquired for $1,260,000 a piece of new industrial equipment. The new equipment had a useful life of 5 years, and the residual value was estimated to be $60,000. Lewis estimates that the new equipment can produce 12,000 machine tools in its first year and 50,000 units over its life. It estimates that production will decline by 1,000 units per year over the remaining useful life of the equipment. The following depreciation methods may be used. 1. Straight line. The second one, double declining balance. The third one, sum of the year's digits. And fourth, units of output. Which depreciation method would maximize net income for financial statement reporting for the 3-year period ending December 31st, 2020? Prepare a schedule showing the amount of accumulated depreciation at December 31st, 2020 under the method selected. Ignore present value, income tax, and deferred income tax considerations. So this is a comparison, between among the 4 methods of depreciation, which one that will produce the highest net income. It means it will produce the lowest depreciation expense for the 3-year period. Okay, so we will prepare the data first. Okay, first of all, we'll calculate the depreciable base. So 1,260,000 minus 60,000, so 1.2 million for the depreciable base. And then this depreciable base will be for straight line, sum of the year digit, and units of output. And then for double declining, remember we need to calculate the double declining rate. So from straight line rate, it is 100% divided by 5 years. So 20% for the straight line rate. And then for the double declining rate, it is 2 times 20%, which is 40%. And then for the units of output, if you want to calculate the amount of units charged, okay, so 1.2 million as a depreciable base divided by 50,000, the total estimated units that the machine can produce. Okay, so 24 per unit. So we'll just make a table of comparison for to see whether which one will produce the lowest depreciation expense. So for 3 years starting from 2018 to 2020. So for straight line, it is just a simple depreciation, which is from 1.2 million divided by 5. So every year the depreciation will be only 240,000. In total for 3 years it is 720,000. And then for double declining, remember it is using the double declining rate times the cost of the equipment. Okay, so 40% times 1,260,000. So the depreciation will be 504,000 for the first year in 2018, and then the second year will be 40% times the depreciable base, the cost, minus the accumulated depreciation, or simply the previous year depreciation. So the second year depreciation is 302,400, and then the third year will be 40% times the cost minus the accumulated depreciation of 806,400, or you can minus the depreciation expense from the previous years. So the depreciation expense for 2020 is 181,440. The total depreciation for double declining method is 987,840. And then for sum of the years digit, because this is 5 years, so 5 over 15, the denominator is 5 plus 4 plus 3 plus 2 plus 1. So for the first year is 5 over 15 times the depreciable base, 1.2 million, so 400,000. The second year is 4 over 15 times 1.2, it is 320,000. And then the third year is 3 over 15 times 1.2 million is 240,000. The total depreciation for 3 years is 960,000. And then for units of output, we have calculated one output or one unit is 24. So just times the units of production for each year. So the units of production started from 12,000, and then it will be declined by 1,000 every year. yeah, every next year. Okay, so it is 12,000 for the first year times 24 is 288,000, and then the second year will be 11,000 because declined by 1,000 times 24, it will be 264,000. The third year will be 10,000 times 24, it is 240,000. So in total it is 792,000. So as you compare the total for each method, the one that will produce the lowest depreciation expense is straight line method. Yeah. So if it produces the lowest depreciation, it will the one who will maximize net income. Yeah. So as the straight line method produces the lowest total depreciation expense, therefore straight line method will maximize net income for financial statement reporting for the 3-year period ending December 31st, 2020.